Saturday, August 25th, 2018, Monaco 64, home of alternative economics and contrarian views. So gold and silver had a very good day yesterday. After I did my video in the morning, both metals rallied quite aggressively. Unusual to see gold actually be up more than 1% in a day. Bill Murphy of GATA always talks about that the gold cartel, the bullion banks, have a 1% limit for gold and probably a 2% limit, maybe a little more for silver. So yesterday gold finished up, I think about 1.7% on the previous day. It was a good day for the precious metals. I get a lot of new subscribers every day, and I'd like to thank all the new subscribers and of course the existing subscribers that have been with me since well, about 2 years when I started this channel, 2.5 years really. And for everyone's support, for everyone's donations, for everyone's sharing the video, getting the network effect. And I really appreciate it that there's people out there who want to listen to me. Yeah, thanks a lot. A little bit about Jim Sinclair. I know I spoke about Jim Sinclair the other day in my video. He will be doing an interview, I think, with Greg Hunter. He did do an interview with Greg Hunter in August of 2015. And I'll just go through what he said in that interview, and I'm gonna look at some of the charts as well this morning. Gold, the gold-silver ratio, and the dollar index. Let's start with the charts. By the way, gold from the lows we saw on August 16th at 1160. At the time, I thought that could be a capitulation low of gold. It felt like it. It was a huge spike overnight, and it rebounded very quickly. When I woke up, I saw that price 1160 as a low, and the market was already at 1175, so it had rebounded quite sharply. I'm not saying I get all these calls right, and I certainly don't. I'm just an observer of the markets. I like observing it. I have told my viewers, of course, that gold and silver, you can trade it. Very difficult, as Jim Sinclair says. You need to be almost like an insider to trade it properly, or be in front of the screen 24/7 almost, like I used to be when I worked in the city, and be able to read the market and feel the market, like the heartbeat of the market. But if you're doing it part-time, it's difficult, very difficult, almost impossible. And that's why I advise people that gold and silver is just money or currency, money that you save. So why do I look at the charts? Well, because I love the markets. I like fundamental analysis as well, but I like technical analysis, and it's sometimes interesting to look at it. That bottom at 1160, so far it looks like it was a capitulation low. So we're up 4% from that low. We closed at 1206 yesterday. For the week, we closed up about 1.8%. The close the previous week was 1184. And so let's have a look at the chart of gold first, because I was looking at a couple of trend lines a few days ago, and especially I think it was Wednesday when we got back above 1200 up to 1201, but then we dipped back. I had looked at the line that we broke that day, and it looked like, I even said in the video, it looks like the bullion banks and they're looking at that line, and they put gold back down, and they did. And then yesterday though, that line was lower because it's quite a steep angle of descent, and we easily broke through it, and we even closed above 1200, which technically isn't really significant, but round numbers always are significant for market psychology and sentiments. So the close at just around 1206 was a good close. The high was 1208. So what are the levels now on the upside? Well, you can see there's another trend line coming there, not as steep. We're still far away from that line. It looks like next week it might actually come around the December 2017 low, which is quite interesting, which was 1236. That was a key level that we broke back in middle of July this year. When we broke that, there was not much support left in gold, and that's why we traded all the way down to 1160. So that's a key level, 1236. I know it's a bit far away. Prior to that, though, not last week, but the previous week's high was, let's have a look here, 12. Yeah, it was around 1213, or let's say 1215. So next week, early next week, if we can break through 1215, that would be very positive. On the downside now, I guess 1200 will be support. Maybe also mid, 1195 or thereabouts. That could be a key support as well. Or, back to that trend line, that steeper trend line. So that's gold. Right now it looks like a bottom. I'm not saying it's going to 2,000 or 3,000 or anything. Unfortunately, gold and silver have been damaged for a bit, somewhat, this summer. But it looks like we've put on a bottom. I'm going to look at the gold-silver ratio. I'm not going to look at the silver chart. I think the gold-silver ratio is more important to look at. And I've got a daily chart here. And yesterday that ratio came off a bit, but it's still highly elevated. So I think there's potential for silver here, especially if the precious metals in general keep going up. So that's the daily chart. On the monthly long-term chart, you can see how unusual the levels we are at is, and how it usually corresponds with bottoms in precious metals bull markets. So that's the gold-silver ratio. Dollar index, of course, really interesting activity in the last couple of weeks. We almost got up to 97. That's kind of the mirror image of the capitulation low in gold at 1160, and since then we've come back down, and we closed around just above 95, which is below the breakout that we saw earlier in August, which is around 95.50 for the dollar index. So why did markets move as they did yesterday? Well, some people will attribute the move to Fed Chairman Powell's speech at the Jackson Hole Symposium, where the central bankers of the world meet to pretend they know what they're doing and what they're talking about. It's hosted by the Kansas City Federal Reserve Regional Bank, Jackson Hole, Wyoming. I think from what I've read, I didn't really listen to Powell's speech. I try not to listen too much to central bankers. I think they're a waste of time, waste of space. They disrupt everything. They're not needed in a free market where you have where you have money that the market decides what it is. And usually, of course, is gold and silver. But yeah, what I've read is that his comments were taken as being a little more, not so hawkish. He seemed to apparently say that the economy is not overheating, and what the market took from that is that the Fed will not raise rates as quickly as people expected. So that's what they're attributing the move in gold and the dollar. But personally, I think markets just move a lot of times, and the Federal Reserve, I think they're like a reactive institution. They don't lead the market. They have to watch the market. They have to watch short-term rates themselves to see what they need to do. We need to end the Fed, as Ron Paul said yesterday in his Liberty report. It's unconstitutional, It's not a free market oriented. It doesn't, it creates inequalities. It creates booms and busts. We don't need it. That's why you should go to the Monaco 64 store. I have and the Fed mugs and the Fed t-shirts. I've got Billy mugs as well if you like. The link to the shop is below in the description, by the way. So what about Jim Sinclair? He's supposed to be doing an interview with Greg Hunter. That hasn't come out yet. I listened to his interview 3 years ago exactly. He talked to Greg Hunter about the gold market. And at the time, he said a few things. And one of the things he said, he admitted that he was told by the insiders, the people in the know from the Federal Reserve, U.S. Treasury, that gold was going to top when it did in January of 1980. He did say March, but I think it was January he meant. It was January 20th was the high of 887.50. And he got out. He admits that. Even though, of course, even back in the mid 70s, he thought gold would go higher. So, but I've talked about the book Our Crowd, which I've recommended in previous videos by Stephen Birmingham. And Jim Sinclair, his father's name was Bertram Seligman. And the Seligmans were part of that crowd. They were the German Jewish banking families of New York, together with the Goldmans, the Lehmans, the Schiffs, even some of the Rothschilds went to the U.S., or some of the New York bankers came to London. Even the Seligmans, I think, did business with the Rothschilds. So these people are all related. They intermarried, and that's why it's important to know that. And it was Jim Sinclair himself who recommended years ago that we read Our Crowd, to know, just to realize that he's not just making things up. And some people, my previous video about him said, oh, Jim Sinclair is a fraudster, he's a shill. I can tell you he's not. I've followed his blog since 2002. He does have a subscription service. He's had it only for the last 2 years with Bill Holter, but his blog has been free all this time. He's been helpful when you contact him by email, or as I used to do sometimes by fax back in 2002, he would reply and talk about the technicals. So what did he say back in August 2015? Well, he said 3 things, aside from saying he was told when to sell gold. And the other thing that's interesting about Jim Sinclair, many people don't know, he was called in by the U.S. Treasury, the CFTC, COMEX, the Fed, to clean up the Hunt brothers mess. When they, well, a lot of people say they cornered the silver market. I'm not too sure they did that. They had been buying silver for almost 10 years, physical silver. But in 1980, of course, silver went up to $50. And then the COMEX changed the rules of the market, said people could only, couldn't add to long positions. They could only sell. And then the market fell out of bed, and it bankrupted the Hunt brothers. And Jim Sinclair was called in by the U.S. Treasury, by the Fed, to basically clean up the mess, close out all the positions. So he's not like just someone who's making things up, someone who doesn't have any credibility. But one of the things he said in this video 3 years ago was he had 3 points that he wanted to make. One was, and I quote, "The downside in gold is extraordinarily limited." And at that time, gold was trading about 1,150. It did dip later that year to 1,046, which has been the low since then. It has been almost as high as 1,400. So he was kind of right in that. I know it's taken 3 years. We're still above that level, though. The other thing he said, number 2, and that's what the people who told him, the same kind of people who told him to get out in 1980 are telling him now, or were telling him then. They said, this is number 2, of course, they said, the coming rally on gold will be stupendous. So that's according to our crowd people. And number 3 was, we may never call you back. So what does that mean? Well, that means that they'll never call him back to tell him when to sell the gold, because it's going to be a rally or a move that you will never want to get out of gold. Could that mean that gold will come back in the monetary system as money? It could be. I don't know. So it's 3 years later. We're still here at 1200. It is above his level. Maybe he has something to tell us in the Greg Hunter interview about what they're telling him at the moment. If you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. You can also follow me on Steemit, DTube, and on Twitter. Have a great weekend, and I'll talk to you later. Take care. Bye.